Hi, Larry Gaines, Power Cycle Trading. In this video, I'm going to show you my top trending chart techniques that I like to use. So what I like to do is go through kind of a trading process, and it starts out with what I call a 7-step trading profits formula. And step one are the chart setups that I'm looking for. So step one of my directional trading profits formula is to identify high winning probability trade setups. And I do this based on 5 swing trade chart patterns that I've identified that are, high kind of probability winning trades is what I kind of define them as. So I look for things that are what I call a volatility squeeze breakouts, either up or down, cycle low reversals, cycle low retracements, cycle high reversals, cycle high retracements. So I'll show you these 5 different chart patterns so you get an idea of what I'm looking for, and these are the trade setups that I'm constantly looking and scanning for. Now this first chart pattern is what we call a volatility squeeze, and this is on Tesla. Now this squeeze is a consolidation phase where price kind of tends to go sideways, coiling, looking to break out either up or down. So with our trading model indicators, the power cycle trading model, we can program in these rules, and you'll see when these dots start, that's the beginning of a squeeze right here. And then when they end, no dots, the squeeze is triggered. Now to look for direction to the breakout in this particular type of setup, we go to momentum, and you can look down here below, and cycle 1 and cycle 2 are my momentum indicators, and this is what we call a multiple time frame momentum flow indicator. So basically when you see cycle 1 down here above 0 and 2 above 0, that's showing positive momentum. And then I like to put in a trend line for break to identify that breakout, and you can see it broke here and then really trended up. Now this was also what we call a cycle low reversal. So when we add in a weekly, you can really see that reversal off of the cycle low. So the next setup, was that cycle low reversal. So you can see Tesla sold off real hard here, and then you can see on the weekly time frame, you can see the momentum indicator, cycle 1 and 2 returning. Cycle 3 is also a overbought, oversold oscillator, so it goes above green. It alerts you to cycle change, trend line break, and also a breakout of volatility squeeze. So a very, very strong technical trading pattern that we like to look for: volatility squeeze, cycle low reversal. Now I also wanted to share with you another example. This is a volatility squeeze again. You can see the dots where they show up. Now this again is on Tesla. This is on a monthly time frame, so I kind of refer to this as the macro. But what I want to show you is that this has potential for a big, huge, powerful move, and we can project our targets using Fibonacci. So this is a swing high to low, and then we have the 1272 extension in here, and that's coming in at 331. So potential on a macro trade is to have Tesla move up to the next major target level of 331. Now this doesn't mean it's going to happen today or tomorrow, but that's the next major target, and has great potential because this is a volatility squeeze on a monthly, which can be very powerful. This next trade setup is what we define as a cycle low, a retracement cycle low reversal. Okay, so basically what we're looking for here is a retracement down to major moving average support. So here's a weekly time frame, and you can see here this is a 15 exponential moving average and a 21. And then looking over on the daily time frame right here on Tesla, you can see here's the 50 simple moving average. This is a very key moving average. So it came down to the 50, bounced, and then started to consolidate. And then our momentum indicators, cycle 1 and 2, went positive, and we had a break here of those clusters of moving averages and a move back up. So this pattern is what we refer to as that retracement cycle low reversal. So coming into major moving average support in this example, consolidating, holding, and then breaking back up. So retracement to moving averages and a break back up. Now this pattern is what we call the cycle high retracement reversal. So here is gold futures on a weekly time frame and on a daily time frame. So here are key moving averages again. This is a 50 simple moving average here on the weekly, and up here on the daily is a 200-day moving average. So you can see here price exploded to the upside on gold, got into the 50 simple moving average here on a weekly, which is also the 200 moving average on the daily, and failed there. So a retracement, so it had been in a major downtrend, retraced up here to these key levels of resistance, which were moving averages, and these are also Fibonacci levels, and then failed. So here's gold again, and this is a weekly time frame. So you look at this swing high back in November of 2016 to this low on gold back in December of 2016. So we take the low, high to low, and you can see also this is a 618 Fibonacci retracement. So major resistance here at the moving average, and then also 618. So this is a retracement moving average failure and Fibonacci failure. So those are great chart patterns as well. So this is the fifth pattern that I look for, and this is what we call the cycle high reversal. So this is on SPY, the ETF, S&P 500 ETF. So the weekly time frame, you can see very, very fantastic explosive move up, very, very strong trend. Now what we're looking for is what we call momentum divergence, so price momentum divergence. So again, here's the momentum indicators that we like to use, cycle 1 and cycle 2. Now cycle 1, you can see on the weekly, starts to roll over and come off. Price is up, momentum starts to falter. So you can home in on the daily and see it even better. So when you look here at the daily time frame, we came up to the high, retraced back, came back up, made a lower high, and then look at the momentum. Cycle 1 is below 0, 2 is going below 0. So this is what we call price momentum divergence. Price is going up, sideways, momentum's going down, and then you can see it finally broke to the downside. So this is what we refer to as a cycle high reversal. So I hope this helps. I like to identify patterns, and this is part of my, what I call my 7-step trading profits formula. And step 1 is to identify these 5 different patterns, and then look for those and trade those patterns using options or however you'd like to do it. So what I covered in this video was the 5 patterns that I like to look for swing trades, and that's pattern 1 is the volatility squeeze breakout, either up or down. We covered that. The cycle low reversal, cycle low retracement, cycle high reversal, and cycle high retracement. So I hope that helps. Look forward to seeing you on my next videos.